Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, we're looking at a daily chart of the ES, and what we're seeing, we had a very whippy, choppy day yesterday. The bears really pushed back hard on these two up days when they went down to the 73s, really bumped up against the 50-day exponential moving average, and I get this question a lot in webinars. Why do you use the exponential moving average instead of the simple moving average? And my answer is always this, because I find over time that with respect to the mini, the exponential moving averages work better. And they're demonstrating that again today. 50, 50, support, support. So, right now, it's the same chart, I'm just going a little tighter. Right now, the bears are in a situation where they have let the bulls make a double bottom in the 73s. They have to counterbalance that and get back through the 50, through the 73s, and go test this low, which is 66. The bulls need to continue to push. The bulls need to break through the highs up here in the 92 area. They did 91.75 yesterday. We did 92.25 the day before. So we're really in a range. We're in a range of, 92 half, 93 to 73 is this 20-handle range that we're chopping and whipping around in, while Washington, D.C., tries to find its car keys. And it doesn't really look like they're going to find their keys anytime soon. They met last night. We've seen the last two closes, hope closes, okay? Meaning we've kind of just not melted up. We melted up on Tuesday. Yesterday you saw this rise back into 87, back into the middle band, which had been tested earlier in the day. The middle band at 87 was on shorter time frames a double top. So 87 is the first order of business with respect to the bulls and trying to get back through 92. If the middle band continues to be resistance, then there's only so many times they're going to push it back to 73 before it goes lower. Right now, the news cycle is in favor of the bears because nobody's really talking, and now they want to fold in the debt ceiling and potentially even the sequester into negotiations over the CR with an Obamacare chaser. So there's all this going on at the same time, and that kind of a deal doesn't get made in a couple of days. Not with these guys. I mean, we're going to push up right against October 17th and the debt ceiling. And every day this goes on, I think that reality is going to continue to creep into the markets. Now, normally I would tell you that this is all setting up jobs, but remember, there is no non-farm payroll report tomorrow. There is no jobs report because there's no bureau, there's no labor department to put that out. So remember that. And ADP yesterday didn't meet expectations, but the market kind of shrugged that off, and it moved forward. So 87.92 on the up, 73 on the down, and 73.66 on the down. And any kind of a big push through in either direction, I think, is going to be news driven. Until then, we're going to chop in this range and try to see what Washington can sort out for itself, if anything at all. Okay, check us out. Follow us on Twitter at Princeton Trader. Check out the chat room. Check out the website, PrincetonTrader.com. I have a lot of people that are subscribing to the website. There's a box on the left-hand side, the left-hand side of the website, that will let you subscribe to the posts. And that way you get the pivot points faster, you get the webcast faster, you don't have to dig through your Twitter timeline to find it. So I'm getting a lot of positive feedback on that. So go on the website, PrincetonTrader.com. On the left-hand side, you can enter your email and subscribe to the website and get everything as it happens. It's a good way to find out about webinars too. And come check out the chat room. We're trading this political landscape as best we can, and we'd love to have you join us. So everybody have an amazing day. I'll be back tomorrow morning with another webcast. Trade them well.